Hey all, welcome back to channel S Quick Invest. Today we deep dive into gold price. Global markets are officially on edge. The US-China relationship has taken a significant turn for the worse, and in response, the ultimate fear gauge, gold, has rocketed to an incredible, new all-time high, smashing past $4,200 per ounce. This isn't just a commodity rally. It's a powerful signal that the world's largest investors are aggressively de-risking their portfolios in the face of escalating geopolitical tension. A new, full-blown trade war is now a distinct possibility. The trade war escalation, the trigger for this volatility was a series of new, tough trade proposals. The US is moving to impose 100% tariffs on all Chinese goods starting November 1st, alongside controls on critical technology exports. China's primary leverage is in rare earth minerals, which are vital for everything from iPhones to fighter jets. The threat of China using this leverage to restrict global supply chains is what truly terrifies the market. Trade wars are inherently inflationary. Tariffs act as a tax on consumers, pushing prices up and slowing down global growth. This is a classic example of a headwind intensifying to the point where it risks becoming a market-changing crisis. The safe haven flight to gold. This is where gold enters the picture. When global instability rises, investors rush to safe haven assets, and no asset is safer than gold. The metal is up over 50% year to date, driven not just by individual investor fear, but by central banks globally. Institutions like the Reserve Bank of India and others are actively hoarding gold to diversify their reserves away from the US dollar, seeing it as the ultimate hedge against both geopolitical risk and the de-globalization trend. This central bank demand provides a massive, stable floor under the price of gold. Beyond geopolitics, the macro cocktail, gold's rally is being fueled by a macro cocktail. First, Fed rate cut expectations. The market is pricing in a strong chance of rate cuts by the Federal Reserve later this year. Lower interest rates reduce the opportunity cost of holding non-yielding gold, making it more attractive. Second, the decline of the dollar. A renewed trade war and global uncertainty tend to weigh on the US dollar, which has an inverse relationship with the price of gold. Third, the persistent US government shutdown adds another layer of policy instability, causing investors to seek assets immune to political gridlock. All these factors are converging to create a perfect storm for the precious metal. The verdict and what to watch. The market is telling us that uncertainty is the new normal. While the stock market has been able to shrug off regional bank troubles, it cannot ignore an open conflict between the world's two largest economies. The key date to watch is November 1st, when the new tariffs are due to take effect. Until then, geopolitical uncertainty and the fear of a global economic slowdown will likely keep a strong bid under gold. It is acting as the world's primary crisis barometer. Consider gold not just as a speculation, but as essential portfolio insurance in this volatile environment. Let me know in the comments what contents you like to watch. If you find the content, please support by liking and subscribing to my channel. Disclaimer: information in this video is provided for educational purpose only and should not be considered as financial advice. Always do your due diligence or so speak to licensed financial advisor before making investment decisions. Thanks for watching, and see you in the next one.